The stock market went down sharply on Friday. This week, I want to talk about how you can make money buying stocks when the market is going down. Plus, I'll do my regular analysis of the markets. We'll figure out if there is more weakness to come, if this is another wave in the stock market crash, and we'll look at the day trade of the week on NERV. So how do you make money in the market buying stocks when the market is going down? Most stocks are correlated to the market. So on a day when the Dow falls 1,000 points, most stocks will go down with it. And it's a bit of an uphill battle if you're trying to buy stocks. And generally speaking, I recommend that you do not buy stocks when the market is moving down. However, there are two areas that you can look at for opportunity. First are the sectors that are inversely correlated. And this is more of a longer term strategy. So when the market's moving down, there may be a sector that is moving up despite the weakness. It's often the gold sector. It could be the oil sector, which is what has been doing well in the last year while the overall market has been a little soft. There's always some place where money is going, and it's an area where there's something going on specific to that sector that drives price action. But I think the more important place to look for opportunity when the market's going down are what are called alpha stocks. Alpha stocks are trading on their own story, and they're characterized by very abnormal volume and strong liquidity. So in the last couple of weeks, there's been 10 or 15 stocks that have moved up quite sharply while the market has done poorly. Now, what has driven those? Well, it's news specific to the company. They tend to be smaller cap stocks, lower price stocks, so often biotech stocks, and that's an area where we've seen some good action lately. Some of these biotech names, if they discover a cure for a disease, it doesn't matter if the Dow goes down 1,000 points. They are going to attract a crowd of buyers because that stock has something going on specific to them. So let's look at a couple examples of those. If I just jump in here, here's NERV. This is a 30-day, 60-minute chart. And you can see that it started to behave abnormally back here. There's the abnormal volume and the abnormal price action. So now we know that this stock is in play. Now on this particular day, it was a good day trader because it was trading with very strong liquidity and abnormal behavior. And then it quieted down for a while, but then it comes alive again with abnormal price movement and abnormal volume. And that started the next leg of the upward trend that we saw over the past week or so, moving from $4 to where it closed on Friday, over $10. That on a day when the market was down 1,000 Dow points. Another example, TCRT. It started to behave abnormally on its latest wave up back on August 3rd. It actually started moving up sometime before then, but then it went quiet for a while. What I love to see is quiet and then comes alive with abnormal price and abnormal volume. We have tools on Stockscores to find that. The market scan tool allows you to look for stocks behaving abnormally. So there you have the abnormal action. It's at around $1.30. It's more than doubled in the last few weeks, driven by something specific to the company. And that's what alpha stocks are all about. All right, let's get into this week's regular market analysis. And here is the 3-year weekly chart of the S&P 500. And we've got a bit of a negative signal this week. You can see the downward trend line of resistance that I talked about last week has held up. We've bounced down through it, and we're now starting another pullback. So that is a bearish signal. Now, not the end of the world yet, because if we can come back for a week or two, or maybe just 1 week, and then build a rising bottom, and then make another stab at breaking that downward trend line, then the reversal is starting to materialize. It's very rare for markets to make V-shaped bottoms, and so this pullback is necessary. It's typical of a market that is trying to make a base. Right now, I think the market looks negative and likely to move lower, and we'll look at the short-term chart in a moment, but it could just be setting up this little second guess of the turnaround, this rising bottom pattern that ultimately leads to a break of the downward trend line. Now let's take a look at the 1 month 60-minute chart, and you can see the problem. We've got this upward trend line that was broken, and then we've now built this falling top with a breakdown on Friday. So that's why I say the market is likely to move lower in the near term. However, we are quite oversold. There's your downward trend line. We're a long ways below it. So it wouldn't surprise me if Monday, Tuesday, we get a little bounce back. But ultimately, until we can break this intraday downward trend line, preferably from a rising bottom, I want you to be fairly cautious. In the short term, I think more weakness is quite possible. Although again, Monday, Tuesday, we could see a little bit of a bounce back. All right, let's jump over to the Canadian market, T.XIU. And this is the 3-year weekly chart. And again, you're in this downward trend that started a few months ago when the upward trend line was broken. We've come up to the downward trend line and now we're rolling over. The Canadian market doesn't look as bad as the US market, largely because of the stability that comes from the heavy concentration of oil stocks in the Canadian market. But still, the move on Friday is noteworthy and it could lead to more weakness. We are a little oversold, but I think ultimately we're doing this until we can break that intraday downward trend line. Let's jump over to commodities. We'll start with oil this week. USO is the symbol I like to use for oil. And you can see it's relatively stable in the daily chart. Let's take a look at the 3-year weekly chart because this gives us some sense of where the market is going. Here's your long-term upward trend line. We haven't made it back to that yet. I would like it to come back to this trend line and then bounce off of it. We're still working on this pullback. We've been stable for the last month. I think it could just go sideways till it hits the trend line, or it could come down and hit the trend line. But once it does, we should see some stability and start to see some upward price movement again. So oil is one of those inversely correlated sectors. It has not gone down with the overall market. It hasn't gone up a lot in the last couple of months either, but it is stable, relatively speaking, and that is perhaps a place to find some safety. If we can start to see the price action move up significantly, break up through some resistance, well then we can see a little bit more of a recovery in those oil stocks. All right, let's take a look at gold, GLD, and you can see that GLD has been suffering for a number of months. It's in a downward trend, so we want to be generally fairly pessimistic about gold stocks. Looking at the 3-year weekly, you can see the downward trend. We are near some support. We've hit it a couple of times, and so if we come back into here, we should bounce off of it. But if it happens that we break down through it, then more weakness is coming. That hasn't happened yet. That's just something to watch for. Right now, negative chart, but not too negative because of that long-term support zone. All right, let's jump into currencies. UUP is the symbol for the US dollar, and you can see that that's one of the reasons why gold is suffering, because the US dollar is moving up. That makes gold more expensive to the rest of the world, and it was up again on Friday. The long-term upward trend is intact there. If we take a look at the 3-year weekly chart, you can see it's going a little bit parabolic, and so at a certain point this parabolic trend is going to break. But right now there is a real flight to quality in terms of people wanting to own the US dollar. Now crypto coin, very different. GBTC, a symbol for Bitcoin, and you can see it suffered on Friday as well. It still has support here at 12, but you can't argue with the fact that there's consistently falling tops on this chart, and that means you're likely to see it go lower near term. Finally, let's take a look at the chart of TBT, which represents interest rates. If this is going up, interest rates are going up. And this one I find kind of peculiar because one of the reasons the stock market went down on Friday was an 8-minute speech by US Fed Chair Jerome Powell, where he said we're going to be vigilant about inflation. We're going to continue to use our tools, meaning interest rates and other things, to keep inflation in check. That implies that interest rates should go higher. And yet TBT went down Thursday and Friday. I really don't understand why. I mean, the main reason the market dropped was concern that interest rates were going to continue to rise, and yet the bond market didn't price that in. It didn't move down, which means this would move up, because this is the inverse of the bond market. And so it's a little confusing. I don't really know how to interpret this. I'm going to keep an eye on it. But this chart still is in a long-term upward trend. We shouldn't dispute that. Nice long-term upward trend line. I just don't know why it went down on Friday when the market itself went down because of concerns about rising interest rates. If interest rates are rising, this should have gone up. we'll see what plays out there, but interesting chart. We'll keep an eye on that. So my ratings, US stocks and Canadian stocks bearish on both time frames. Gold bearish on both time frames. Oil, I've got neutral on both time frames. I think it could come back a little bit more to get to that trend line before it tries to bounce. US dollar long-term bullish, short-term neutral. Bitcoin bearish on both time frames, and interest rates neutral on both time frames, which is a little bit of a conflict with what we see in the overall market. All right, let's take a look at the day trade of the week. This is a stock that went up really well on Friday despite the market going down. This is an alpha stock. It has been in play for a number of weeks. It's a stock that has given us lots of trading opportunities for day trades, but also swing trades. And there was a good entry point on Friday right here on what I call a pullback play. See how it broke this line here? This line is drawn across two inflection points. It made an action candle, which is my algorithm that looks for abnormal trading activity. This is on a 1 minute chart. So the buying point was there, the stop loss point was there. At the end of the day, it was here. And so we can go through the economics of this trade. For every $100 of risk, you would buy 225 shares. The cost to do that, because it's a $7.50 stock, was $1,618 of capital. Because this stock is over $3, your broker will lend you 2/3 of the capital, which means your margin requirement, the amount of capital that you have to put up for this trade, is $540. It made 6.8 times reward for risk by the end of the day. For every $100 of risk, that's a $680 profit. For $540 that you had to put out to make the trade, that's 125% return on a day when the market was pretty miserable. And that shows the power of alpha. Every day I look for alpha stocks. I build a list first thing in the morning of the stocks that are showing signs of alpha. We do that in Active Live. You can learn more about that on Stockscores.com. Hope you've enjoyed this video. If so, click the like button, subscribe to the channel. Make sure you turn on those notifications. Just click on that notification bell so that you are alerted when I upload a new video. Hope you've enjoyed it this week. Thank you very much and trade well.